Welcome to all of you to this presentation of our third quarter results in Benchmark. As introduced, I am Trond Williksen. I'm the CEO of Benchmark, and as normal, I am here together with our excellent CFO, Septima Maguire, and we will give you insight into the financial and operational performance in our third quarter, as well as cover outlooks for the group for the remainder of this financial year. So let me start as normal with some highlights from the quarter. And again, we are happy to announce financials reflecting a strong and continued progress for the group. Third quarter this year represents the fifth consecutive quarter of year-on-year and quarter-on-quarter growth in adjusted EBITDA. Step by step, we are moving the company in the right direction, as we have been aiming for and as we have been executing on. Also this time, the numbers speaks for themselves. Revenues year-on-year for third quarter alone has grown by 28%, and year-to-date we have grown 32% compared to where we were after the first three quarters in financial year 21. The growth in the group revenues stems from growth in all three business areas. Advanced nutrition has continued to grow in the quarter. Genetics has had a particularly strong quarter with 50% growth in the third quarter of this year compared to last year's third quarter. And finally, we have seen large growth in revenue numbers for health due to the launch of Ectosan and CleanTreat, which was not operational in the third quarter of last year. As indicated initially, we have not only seen an increase in top line, we have also been lifting our adjusted EBITDA for the quarter by 26% year-on-year. That's when we are excluding the effects of fair value uplift. And this is a result of higher revenues, better asset utilization, and cost discipline in the period. Looking at our performance year to date, adjusted EBITDA has grown 99%, which means doubling compared to where we were 1 year ago at the end of third quarter. Our group margin year to date has also been lifted to 17% now compared to 11% year to date at the same time last year. That also excludes the positive effects of fair value uplift from biological assets. All in all, a continuation of strong operational performance as we have seen it over the whole period since we completed the restructuring at the end of financial year 20. We are also happy that we throughout this period have been able to keep a strong financial position, maintaining good liquidity and a solid cash position. Q3 has also been a quarter where we actively have been progressing towards a listing in Oslo. The considerations around this has been announced in previous quarters, and we are now aiming for a listing at Euronext Growth in Q4 of this calendar year. At the time of the Euronext Growth listing, the company intends to execute a limited share issue aimed to satisfy the regulatory requirements for such a listing. As we also previously have announced, we see the listing at Euronext Growth as a first step towards an uplisting to Oslo Børs, which we aim to do in the first half of calendar year 23. In tandem with this process, the board intends to consult with shareholders on whether to maintain its admission of the company's shares trading on AIM. Timing of both listings are of course subject to market conditions. Moving over to give more granularity on the performance of the three business areas in the quarter. As initially stated, we have seen a particularly strong performance in genetics in the third quarter. Growth in revenues in the quarter has been 50% compared to third quarter last year. This is driven by growth across all products and services in the business areas. Salmon eggs has grown by 39%. Revenues from shrimp genetics has grown by 164%, and our tilapia genetics sales are up by 57%. Despite the strong growth experienced in shrimp and tilapia genetics, salmon genetics still remains the financial and operational backbone of this business area. While shrimp and tilapia still are at an early stage of development commercially and remains to become profitable. We are, however, encouraged by the progress that we've been able to execute, especially the growth in sales of our SPR shrimp genetics has been to our satisfaction and above the targets we had set for ourselves, given that we are in a year where we launched the products into the market. The strong growth in the salmon genetics, salmon eggs sales in the quarter is due to positive market conditions for us, especially in Norway, but also down to good commercial efforts where we have been able to secure new customer relationships. This year, we also are importing more eggs than ever to Norway from our Icelandic facility. This has been made possible through the timely investment that we have completed in the new incubation center on Iceland. An investment that has lifted both our capability in terms of volume, but also generated a considerable lift in the technical quality of the eggs that we are supplying. And both has been very well received by the customers, and you can see it also in the numbers. I also had the pleasure of being in the opening of that facility, the formal opening of this facility last week in Iceland, and we had with us there more than 90 satisfied customers. So that was a good venue, and it's proved it's an important investment for us. Moving over to advanced nutrition, they have been performing as we expected in the quarter, continued growth in the top line. As we announced coming into the quarter, the third quarter has been a quarter where the timing of deliveries of orders have played a role both in the beginning and the end of the period. And this is also reflected in the financial figures for this particular quarter. All in all, the performance of advanced nutrition has been impressive for this year, with growth in all product groups and strong growth in financial performance. We see the commercial momentum that the advanced nutrition organization has been able to build, continuing also in the time to come, helped by market conditions that are still looking favorable ahead. And we have been able to stay resilient to cost effects of inflation to by better productivity and asset utilization. Finally, moving to health, our third business area. Third quarter has been a quarter where we saw a decline in demand for our Ectosan Vet and CleanTreat after the spring delousing season. You have a season in the spring where you have to delouse, and towards the summer months. It is always difficult to predict, given the limited experience we still have with the solution in the different seasons. But it's probably what we should have expected based on the farmers' activities on delousing in this post-spring delousing period. We also still have work to do in order to get the solution embedded and made available to the farmers to ensure an uptake of the solution that is optimal in each periods of the year. This is also why we have taken steps to strengthen the commercial organization working in the market with this solution, and we have done a considerable strengthening of that part of the organization. Where we are right now, and we are talking August, the farmers have entered into the main sea lice season that will last throughout the fall. As of now, we see this reflected in significant interest and use of the solution, which we expect will impact our performance positively from now on. And both vessels are now in operation with treatments. Third quarter has also been a quarter where we have been advancing the new configuration of the CleanTreat system to make it more integrated into the farmers' established infrastructure, thus improving the availability, reducing complexity, and reducing cost in the use of solution. The interest for such a configuration of the solution is considerable, and we are currently in commercial discussions aimed to install the system on large wellboats being brought to the market in the years to come. We also continue the work that we are undertaking to expand the marketing authorizations. We have previously announced that we were granted an extension to the label with one reuse of water, of the treatment water in Norway. And in the period, we've also been granted a marketing authorization in Faroe Island, which could be the next country in line where we enter with the solution. A few more words on the new configuration of CleanTreat. This opportunity is created by the fact that the new generation of large wellboats now are about to emerge into the market. Unlike how it was initially, and unlike how it has been up to now, the size of these new vessels makes it possible to install the CleanTreat system directly on board the wellboat. Thus, we can avoid to use an extra and costly vessel or a PSV as a platform for a CleanTreat system. This increases both the availability for the farmers and it decreases cost of the total system. Such a solution also poses an opportunity to make the solution less capital intensive for Benchmark, as it supports a sale and licensing model, reducing capex and improving revenue visibility. We foresee that we will keep both configurations in a transition period, migrating to an integrated model as we are moving forward. The process of this will be a priority, and as mentioned earlier, we are in ongoing commercial discussions on the new integrated solution. So to sum up, the direction of travel when it comes to CleanTreat and Ectosan Vet, we started out launching the solution in August last year with a marketing authorization in Norway that was not optimal, allowing only one reuse, and with an operational setup or an infrastructure which was the only option at that time. Since then, we have been and still continue to work on the marketing authorizations to make them more optimal, allowing for better efficiency in the use of the solution. At the same time, we are working on transiting the solution to become a more user-friendly, less costly and less capital-intensive solution, eventually taking us to the adoption and the use of the solution that we are targeting. This path of development is possible as the fundamentals of the solution has stayed the same and has been confirmed over the first year of operation. We have a transformational solution to sea lice treatments, which is very efficacious, takes care of fish welfare, and is environmentally friendly. So with these words on highlights and also a little bit more granularity on the business areas, I now leave it up to Septima to take us through the financials in more detail. So floor is yours, Septima.
Thank you, Trond. So all business areas continue to make progress, and the momentum that we've seen in the first half of the year has continued in the third quarter, with revenue growth of 28% in the quarter and stable gross margin, driving adjusted EBITDA growth of 48% to £6.6 million. The adjusted operating profit has been impacted by the commencement of the depreciation of the tangible and intangible assets associated with the CleanTreat Ectosan operations and development costs. Our loss before tax was also impacted by movement in exchange rates, mainly related to US dollar-based loans and the non-cash fair value movement of derivatives during the period when compared to the previous year. From a quality of earnings perspective, adjusted EBITDA excluding the non-cash fair value uplift increased by 26% to £5.1 million. And net debt excluding our leased assets of £59.3 million was impacted by the payment of our take-or-pay contract for Artemia within our nutrition business area during the quarter, as is the norm. But our cash position of 38.2 million leaves us well supported as we turn the corner towards cash generation. Moving on to the next slide to look at genetics. Quarter 3 was a strong quarter with revenue growth in all product areas. The core business of salmon genetics performed well, with salmon egg sales growing by 31% in volume and 37% in value. This was aided by increased revenues from harvested fish, which in financial year 21 were included in quarter 4, as opposed to quarter 3 this year. As Trond noted, our ability to service additional demand in the salmon egg market and the associated sales growth was directly as a result of our new incubation house in Iceland, which has increased our production capacity and also improved the quality of the eggs produced. This sales growth drove adjusted EBITDA, excluding fair value uplift on biological assets, by 81%. And with CapEx for the quarter at £1.3 million, this mainly was driven by the final spend for the incubation house and commencement of work on a freshwater pipeline in Norway to ensure surety of supply of fresh water throughout the year, particularly during the winter months for our facility there. This work will continue during the financial year 23. Moving on to the next slide. As we've noted, core salmon was strong during the period and delivered 6.5 million of adjusted EBITDA. Of this, 1.7 million was invested between tilapia, shrimp and salmon Chile as we continue to ramp up and commercialise these growth areas, leaving 4.8 million of adjusted EBITDA for the quarter. With respect to our SPR shrimp, as you can see, we ceased capitalising costs in the first half of the year, as we've now moved from development phase fully into commercialisation. And as previously noted, the growth CapEx invested this year was mainly the incubation centre in Iceland. But with good progress this quarter and good visibility on egg deliveries for the last quarter, we expect to deliver solid results for the full year. Moving on to the next slide to focus on nutrition. Nutrition continues to progress well. In quarter 3, they benefited from tailwinds in foreign exchange at a revenue level, which supported the overall year-to-date revenue growth of 15%. The timing of orders has seen sales slightly behind versus the same quarter last year, but with visibility on the orders, this is reflective of timing rather than a shift in demand. Cost control in this area continues to be strong, whilst continuing to invest in our commercial activities to drive sales. With revenue growth in each of the product areas, Artemia diets and health overall in the year, we expect this to continue as we finish out the financial year and we continue the trend of strong trading. Moving to the next slide to look at health. So health continues to ramp up the Ectosan CleanTreat product, delivering revenue of £3.8 million, of which 0.2 relate to recharges for vessels and fuel. The revenue was impacted by low CleanTreat Ectosan utilisation during the quarter, as Trond noted. But the sales of Salmosan provided of £1.7 million provided good contribution to gross margin in this business area. Albeit growth in our gross profit was not sufficient to offset the increased OPEX from the CleanTreat Ectosan operational team ramp-up, which was not in place in the same quarter last year. And this resulted in an adjusted EBITDA loss of £0.6 million versus a loss of £1.2 million in the same quarter last year. As Trond noted, moving to the new configuration will allow us to create a business model which is less capital intensive. Whilst this will take our profit expectations down in health for next year to limited growth expected in adjusted EBITDA in financial year 23, this is due to the lead time in moving capacity across to the new model. It will also fundamentally reduce the financial risk around low utilisation, which exists in the current PSV model, whilst strengthening our position in the medium term by allowing us to better serve the customers. Overall, for the group, even with reduced profit expectations in health for next year, we expect to still deliver good growth in line with previous medium-term guidance. Moving on to the next slide to look at cash flow. So, with strong trading results from the group as a whole, we generated cash generated from operations of £26 million, but a significant amount of this, £22.1 million, was utilised in building up working capital. The increased working capital is driven by all business areas, either through the increased biological assets, amounts paid on the take-or-pay contract, or increased receivables due to higher sales in all business areas. Working capital investment continues to be an area of significant focus for the business. Interest and taxes increased mainly due to taxes on increased profits in our tax-paying countries in both nutrition and genetics. Capital expenditure of 8.9 million reflects the lower growth capex versus last year. But with cash of £37.7 million on the 23rd of August and available liquidity of £50.3 million, we're well positioned to move forward towards profitability and cash generation. Next slide, please. So, as Trond noted, we've previously highlighted investigating a listing in Oslo. Given the fact that we consider that an Oslo listing would allow us access to the leading seafood and aquaculture exchange, we've been moving forward on this. And the first step of this would be a listing on Euronext Growth in the latter part of this year. The quantum of a proposed equity raise would be limited to the extent required to cover regulatory requirements for the Oslo Euronext exchange. We would then intend to step up to Oslo Bourse in the first half of the next calendar year, and in tandem consult with our shareholders over whether to maintain the AIM listing. As you would expect, all of these are dependent on positive market conditions. And on that note, I'll hand you back to Trond.
Thank you, Septima. And let's move on to the outlooks from where we are today. After strong performance in the first 3 quarters of this year, we are trading in line with market expectations for the year in totality. We expect a strong end of year performance in genetics and advanced nutrition, completing a very good year for both those business areas. Focus for us in the period to come is, of course, to continue to roll out the Ectosan and CleanTreat solution in the market. We remain in a very important period where key is getting the solution more embedded in the sea lice treatment strategy of our customers. A key focus will also be to continue our efforts transiting the current PSV-based solution to a more embedded solution, less costly and more adaptable for the farmers and less capital intensive for us. We assume that this transit will take us next year, as we are also assuming that we in this period will transfer some of the existing capacity from our current configuration using the PSVs to use on the new embedded solution. This will also impact the performance in the year to come. We expect limited growth compared to this year, but we take this because it will benefit the periods thereafter. On the final note, let me just end our presentation reminding everybody why Benchmark is such a unique company, a unique value proposition, and a unique investment opportunity. First of all, we are so lucky that we are in the aquaculture industry. It's an industry that is young, will play a crucial role in global food supply in the future. Consequently, it will have strong growth driven by global megatrends, demographics, sustainability, and health. So the industry itself will provide strong growth for those companies who are in that industry and that are well positioned. And this is exactly what Benchmark is. In this industry, we provide specialized, high margin, mission critical solutions to enhance farming efficiency, animal growth, fish health, and fish welfare, the crucial factors within any biological production. And in this industry, we hold market leading positions in what we are doing in Benchmark. In sum, what we represent is a truly unique biotech platform. In my mind, the most unique one in this industry. Bear in mind, we are not a young biotech. We are a well invested one, which differentiates us from the early stage biotechs. We have 2 well established business areas, genetics and nutrition, and you can see from the numbers and the track record we have had on those areas over the last quarters. And we have a third business area that are well away to become also an established business area. Good news is also that the company is at a point where we have a well-established strategy and a financial framework for growth and returns. We are long past the initial development stage. We have executed on a needed restructuring in 2020, establishing a firm commercial foundation and financial discipline. And we are now at a stage of consistent delivery on a financial framework that will generate cash and returns. And you see the tracks of the consistent delivery in the last quarters after the restructuring. And finally, we are more than just an ordinary company. We are purpose-driven with a high quality organization and with strong ESG credentials. Sustainability is at the core of everything we are doing. It has always been like that, and it will always be like that. So with those final comments, I end our presentation, and we are now opening up for Q&A.
Thank you. Right, a couple of questions certainly on dropping the AIM listing or the potential of it. What are the shareholder approval rules, and what would the impact of the move be on small shareholders?
Septima, probably you are more closest on that.
There are shareholder rules associated with approval to delist around the percentage shareholding, but also the percentage of the number of shareholders that we have in place as an organisation. In terms of the consultation around the potential delisting, we would have a consultation process where we would seek to answer all questions around shareholders. In terms of small shareholders, one of the things we've been investigating is can a UK retail investor hold shares in a foreign listed company. And given the fact that on the number of platforms that can be done, we're investigating which platforms, etc., so that we can facilitate an increase in knowledge around that. So it would be subject to shareholder approval, and we would run through that process and provide information in advance of any consultations to ensure that shareholders are part of the process.
Thank you. Leading on from that, what's the rationale for a dual listing in Oslo? Can you access a new pool of capital that was not able to invest in the company when it was listed on AIM?
Well, the reason we do this for a reason, you know, we would like to place the company on a listing menu where you attract, you know, the most, you know, as many investors that are interested in the sector that we are in the aquaculture sector, you know, and looking at that, it's obvious that the Oslo listing venue is the aquaculture venue of the world. You know, it attracts not only Norwegian investors, but you know, European investors and global investors. So it's the aquaculture ecosystem venue, and we believe that given that we are now focusing on one industry, and that is aquaculture, and that's going to be that way going forward. You know, we need to be part of that ecosystem, and that will you know, increase the tension around Benchmark, which will benefit both existing and new shareholders of the group.
Thank you. And with the additional listing in Norway, will you switch your reporting currency to NOK ahead of the listing?
The functional currency of the group is defined by the fact that our top co is a UK PLC. We remain a UK PLC, and that does not change the functional currency of the company or the reporting currency. So we will still be reporting in British pounds.
Thanks. Moving on to animal health and specifically Ectosan CleanTreat. Can you talk us through the expectations? You mentioned obviously they're lower in the short term. Do you expect them to be similar to previous expectations in the mid to long term?
And the answer to the last part of that is yes. Medium to long term, the answer to that is yes. Short term, we have experienced, lower than expected uptake of the solution in Q3. As I said, right now we are experiencing more uptake of the solution as we are moving into the sea lice season. The farmers are not delicing if they don't have lice. That's the requirement. But as of now, you see more interest, and both vessels are operating. And the transition period we are talking about, because we are going from one business setup to another setup, that will give us a limited growth into next year compared to what probably many have been expecting. But it is an important and natural development of the configuration of the solution that will bring benefit for the solution in the long term.
It might be useful just to reiterate what those medium to long term objectives are. So we've stated and very clearly at Q2 that for health, that we saw that the global market for Ectosan CleanTreat was 75 million, of which 50 million was Norway. That is unchanged. And that the margin objective was 30% up to 60% as we get better operational efficiency, and that is also unchanged. The main benefit that this has in transition is making this significantly less capital intensive for us, and then also kind of working with the customers to get it embedded as the primary solution to ultimately increase uptake, which we feel we're moving in the right direction on that front.
Okay, thank you both. Sticking with a bit of CleanTreat, obviously the change in the model is going to make it less capital intensive, but is it also likely to be less profitable in the long run, and what will happen to the existing leased vessels?
I think when it comes to profitability, medium and long term, I think we already answered that question in the last answer. What will happen? I think as I said also initially, in the transition period, we will probably keep both the solutions. But what we are stating in the RNS is that during next year, which is the transition year, main transition year, we assume that we will take out one vessel in part of the period. So we will reduce capacity in order to transit from the current solution to the new configuration.
And how are customers responding to the new CleanTreat strategy?
Well, as I said, there is considerable interest of doing it this way. One of the things that the farmers have been scratching their head on is that they have a wellboat already, which is a costly infrastructure where we do the medical treatment. In addition, we come with a CleanTreat system on the top of our PSV, and they see that is a huge infrastructure, and that's a costly infrastructure that they need to pay for. So and they are investing in wellboats anyway. They are the ones who are bringing forward the big wellboats. So of course they are positive to the opportunity to have a solution available on top of the already established infrastructure that they have. It makes it much more available for them when they would like to have it. Because it's the vessel that they already have. The sea, it's less costly, so that's why we are in commercial discussions with the aim to install systems on the boats that are coming in the coming years. Should remind everybody that these boats are coming throughout the coming year, but it is something that will develop over the years after that. Because up till now the vessels have been too small, but they are being introduced into the industry right now. Sorry.
Thank you. Just around the impact of inflation, particularly utility cost inflation, do you have long-term inflation built into your contracts with, or beg your pardon, do you have the long-term contracts with your utility providers?
Just a general comment on inflation. You can probably fill me in a little bit here, Septima, as we move. But of course, we are not immune against the inflation that everybody sees these days. It comes in different forms. It comes on utilities, as you are mentioning, Hannah. It comes on labor. It comes on all kinds of things that goes into our production. If you look at our numbers in Q3, but if you look at our numbers, how they've been developing over the last years, also you see that we have been able to handle that in a rather good way. The reason is that, of course, we have the opportunity to forward some of these increased costs into our products and solutions to the customers. But we have also been quite good at mitigating the cost effects by increasing our efficiency. And the business area that is most exposed to inflation, I would say, is advanced nutrition. And there we have been able to, through increased efficiency, to take down unit costs in production throughout the period. So that's an important strategy to mitigate all this. In terms of utility costs, electricity, so everybody is aware. In genetics, we have two main facilities. One of them is in northern Norway. And yes, electricity prices has increased in Norway, in the southern part of Norway. In the northern part, it has gone down. So electricity price in the northern part of Norway is actually very inexpensive at the moment, since you don't have cables that transfers electricity from north to south, and it will stay that way. On Iceland, it's the other place where we have our big genetics facility. That's the same thing, it's thermal electricity, cheap compared to whatever we are talking about in the rest of Europe. So we are well placed in terms of that. And you should also mention that in advanced nutrition, our main facility in Thailand, there we have increased energy costs, but we are also there investing, and we have publicly said that we are investing heavily in solar panels in order to try to mitigate some of that. So we are really on this, and we are not badly placed in order to take this. But will we be immune against inflation? Not.
That would be a very good place to be, wouldn't it? What is the current view on when the group will become cash generative?
Septima, that's your department. It's our department
indeed.
for you to answer.
Yes, we are working very hard towards that. Initially, we had said financial year 23, and that's not out of sight, but it'll be a point at which it'll be a year of turning that corner towards cash generation. And so with the pivotal change in business model in terms of health, that may push out the cash generation point into financial year 24. But as I'm sure all of my business leaders would attest, we have been very heavily focusing on the 23 target still, because we still feel it's within our grasp.
Thank you. Well, that's it for the questions today. So thank you both for your helpful answers, and we look forward to catching up in another 3 months' time.
Very good. Always a pleasure, Hannah.
Thank you to all of you attending.